Welcome back to another episode of Founders Fridays. As I shared with you in the past, this is a tell-all for anyone focused on driving revenue. Our theme continues to be around product-led growth. Blake's back for week 2 of our discussion. Last week, we covered several topics around Blake's investing style, OpenView partners, what do we mean by product-led growth. We're going to shift gears a little bit today, Blake. So let's talk a little bit about how or why should companies care about PLG? You published some really awesome research last year that I have shamelessly quoted on your behalf that talked about how enterprise value can be 2x with PLG companies relative to the SaaS index. It talked about how companies that achieve a certain scale as a PLG business then tend to accelerate past that inflection point right around 10 million in ARR. And you also talked about the overall value that's being created with PLG and market value. Share a little bit more about those metrics, and if there's any new research or updates that the audience should be aware of. Let's start there.
Yeah. So this is something that's borne out in the actual numbers itself. So if you look at public companies, this is where we came up with this stat. And just look at, general non-PLG SaaS businesses, and then you look at PLG businesses specifically, again, all public companies, and you look at their general sort of valuation multiples. The valuation multiple for PLG tends to be, on average, 2x the valuation multiple for non-PLG SaaS businesses. So that's where the data is coming from. Now, what's behind that? It's not just that investors, because public market investors oftentimes will weigh the numbers more than just, kind of the hype of a trend. Sometimes there's hype in public markets as well, but it's not just that people think that, PLG is great. It's that they're looking at the numbers, and the numbers themselves look different than non-PLG businesses. And so why is that? You can grow faster on the top line. And how do you grow faster on the top line with self-service? Well, on the one hand, when you have a sales team, which, especially in the early days, might be a relatively a few people that are on your sales team, you have to use those resources very, very carefully. So they can't talk to everybody. They can't talk to people that are too small because those are the uneconomical deals. They really have to talk to your ICP. And what is the sales process? It's all about discovery and qualification in the early phases. Qualification is really a term to describe kicking as many people out of the funnel that are going to waste my time as I possibly can, so that I can focus on the couple that I'm going to close. So when that's the going in premise, it just means that you're saying no to lots of potential opportunities that aren't the best fit opportunities for you. But now if you change your go-to-market model and make it self-service, where it's anybody can come and sign up for this product, just the way that anybody can sign up for Instagram or Amazon or whatever the thing is, you're not turning anybody away. And so you can be attracting all segments of the market that see value in your product or in your solution. And then also you don't have to say no to certain geographies. You can say yes to all geographies because there's no time zone issues. Self-service is what's, onboarding them, not your humans. And then also you can be selling at, 11 p.m. on Saturday night. You can be selling at 3 a.m. on Sunday morning, and you can be selling at, in the middle of the day on a weekday as well. And so the way I describe it is that when you have self-service, you can say yes to everybody, but then also the door, you're open 24/7, 365 days out of the year, not just the selling hours for your sales team. And so that is what allows you to just accept more customers, onboard more people, and drive more revenue. Canva is a really good example in this regard, where Canva is, they've projected that this year they're going to be $1 billion of ARR. If they only focused on one ICP and rigorously qualified everybody that came through their funnel, they would not be $1 billion ARR business in the less than 10 years that they've been around. It really is PLG that allows them to be mass market, which allows them to get more revenue and to grow as quickly as they have. So that's the first factor. And then I'll go quick on the second factor, which is because you have a way to describe PLG is all of this automation and all of this self-service it's a way to delabor the growth engine behind your business. And so if you're removing the human dependencies, that also means that all of that human effort that usually it took to sell somebody and to onboard them and to get them, successful, if that's all now being automated, then that spend previously is now dropping to the bottom line. And so that's where you get the capital efficiency piece, is that You can get more revenue. It costs less to sell it and to service it. And so that's where you get the sort of faster growth with better capital efficiency, which is the fundamental math behind why these businesses have higher valuations.
I love it. I think the context that you shared behind the numbers is so valuable, it's so relevant. And I think that you kind of really absolutely got my attention when you talked about, the qualifying process is you're saying no to a lot of things, which as a founder is incredibly hard to do. I think my co-founder who actually builds the product is much better at that, wearing kind of the hat that you just described. And then, it kind of switches to where you now have to attract anybody and everybody that can self-service sign up to your product. So it's an interesting journey to be on as a founder, kind of listening to you sort of speak to it from the lens of having been through this a few times with other companies. So let's talk, last week when we talked about this, you talked about product design as sort of leading with that. Let's talk about that for a moment. Some of the companies that you brought up, Slack, Calendly, Expensify, et cetera, and sort of this viral nature of the element of, some of these workflows. Is that something that you can design for?
For virality specifically?
Yeah. Or is it something that you kind of select into it? Like how do you think about that?
Yeah, you can definitely design for virality. Now, I will say that there are certain, problems and product areas and opportunities where there is natural virality, and there are others where there is weaker virality, but there tends to be viral opportunities in most markets, in most problem areas. So for example, we're on Zoom right now. Zoom is inherently viral.
Right.
You can't have a Zoom by yourself. There's always at least one person on the other end, if not many people. And so, that creates a viral opportunity if those people you've invited to your Zoom meeting haven't heard about it before. We've obviously all heard about Zoom now, but in the early days, that was ways that Zoom got discovered. Calendly is very similar. Just the same way you can't host a meeting without somebody else on the other line, you can't schedule a meeting unless you're scheduling with somebody else. You can't schedule with yourself. And so by sending the Calendly link, you're both using it, but you're also promoting it. And so there's inherent virality there. Now, there are other things that are, less obviously and inherently viral, but still very viral. So for example, a survey from like SurveyMonkey, that's also viral because it's one person that's sending it out to perhaps 100 respondents. And so those 100 people have both used SurveyMonkey, but they've also discovered SurveyMonkey. So when they have their own need to run a survey, they can use that tool that they enjoyed using. But to pick a less obvious example from Expensify. So Expensify, again, they go after individual end users who are submitting their expense reports, but expenses are in some way interior to your company inherently viral as well, because you can't reimburse yourself. You can't approve your own expense report. You have to send it to your manager. You have to send it to finance. Everything has to be approved. And then you close the loop through getting that ACH reimbursement. So even though that's a less strong viral loop than the Calendly or the Zoom viral loop, it still is viral. And you can find a way to latch on to that virality and go from submitter to manager to sort of finance team, and then also go from submitter to peers of people who are in the same position, say a sales rep who has a lot of expenses to another sales rep that has expenses as well. So there's a way to drive sort of both peer level word of mouth and virality, and then also the natural virality from the particular workflow that your product serves.
Got it. And so taking this kind of to the other extreme, is there a box that you kind of draw around, where PLG fits? And then there's maybe certain things that will never make it into that box because, it's just so different from the way the PLG principles operate. Like what would that look like? What are some of the places where like it's not even worth going after that?
Yeah, I think that my view and my general thesis is that I think product-led growth is going to transform the vast majority of software categories, call it 80% plus. Mm-hmm. And that's really just because all software has end users, and all of those end users have mobile devices where they can go onto the App Store, they're using Chrome, they can go onto the Chrome Web Store, they're using other applications that have marketplaces attached to them. Just everywhere they look, there's one-click options to install software. So because of that, the cat's out of the bag, you can't put it back in. That is why every end user in the world for every problem is constantly looking for new solutions, and they're going to solve their own problems. Just the way they brought their own device, now they're bringing their own app. And so you can't undo that. Now, What's that perhaps 20% or 10 to 20% that will be harder to access? That really is, I mean, certainly you could point to like regulated industries or things where there is a lockdown of like IT not allowing end users to take any actions that are unsanctioned. Mm-hmm. So, finances, financial services and things like that could be those categories, government. But I think that even then, you still see PLG adoption in some of those accounts. So it really is like the core systems of record for large industries, that for large enterprises that, virtually never turn over anyway, probably aren't going to turn over through PLG. So like take the core system at a bank, the ledger that sort of keeps track of everybody's balances and all the transactions. Those are still very antiquated legacy solutions, and I don't see them getting refreshed, anytime soon at all, let alone through a self-service, developer oriented solution or something like that. So yeah, there are some of those core systems of record that are just so mission critical to large enterprises that they might not ever be, PLG-ified.
Got it. So I think what you just called out there makes a ton of sense. I think let's maybe shift gears from product to go to market, right? So on the go to market side, you kind of touched on this already in terms of what the sales funnel looks like, but maybe go into some of the myths that we've heard around the go to market side. That PLG is just free trials, or it doesn't necessarily need a sales team, or that the product team is in charge. So kind of help bust some of those myths, because I know that's not always accurate or true. But when does what is it beyond free trials, or when do you actually need a sales team to be introduced into a PLG motion, and how do you know that you're ready for it? Or what role does the product team play in driving the go-to-market side of the business, not just building the product? So let's kind of hit those three areas, and let's take those maybe one at a time.
Yeah. So the starting point is that it has to be self-service capable, and that theoretically any user can come and go from sign up to activation to aha moment and getting value, to then swiping the credit card, to then inviting team members, and then even driving expansion revenue. That all of that can happen with zero human involvement from your team. So that's where you start. Now, when you have that foundation, it allows you to do whatever you want. If you want to strategically, for certain individuals or certain accounts that are in your ICP of strongest fit account, and you want to proactively reach out with human support to help them get through the journey faster, or get to that aha moment faster and sort of reduce time, then you can do that. But that's optional. That's like a choice that you can make to accelerate things, as opposed to if humans aren't on the phone, software is not getting sold.
Right.
So that's kind of the, is it mandatory or is it optional? And then, so once you have that foundation and you're in the world of the optional, then you can start to look at, when do you layer in sales? And I think that's a common misconception as well, is that PLG is somehow anti-sales, that you need to build this magical product that sells itself, and you don't have anybody that works on the go-to-market team, and then you're just going to one day wake up and be $1 billion company. That's not PLG. Again, it's the starting point of self-service, and sales is still very much has a role in PLG. And if you look at the large PLG companies at scale, there's just as many salespeople as with any software business. But what is different is the order of operations. Instead of having to hire sales first in order to get your first customer, because again, without salespeople, you can't sell. Now it's a little bit more, okay, we've gotten our initial customers, we've gotten this self-service base, we're generating revenue, but we're starting to see a dynamic where customers get to 20K of ARR, or 30K of ARR, and there's an opportunity to get more, but they're not getting there on a self-service basis. How do we get to that next step? We're not being able to go from, one team to the next team, or from multiple teams to sort of wall-to-wall enterprise-wide adoption. Why is that? A lot of times when you start to see those natural limits, in how far you can get on a self-service basis, or through a customer success aided adoption, can be the indication to you that now's the time to add sales. And so the role of sales is really much more expansionary to sort of help folks get to the next level of usage and get to the next level of value because they're already using the software. It's an expansion motion, as opposed to I'm trying to convince you to start an RFP, and then I'm trying to win the RFP, and then I'm trying to negotiate a 7-figure contract and convince you to choose me over my competitor. That's the old way of selling. And the new way of selling is You've already adopted my product through self-service. You're already paying for my product. You're using it on 2 teams. You want to use it on 20 teams. That's where you want to go. That's where I want to go as well. We're on the same side, hand in hand. Let's get to that shared destination. And so it's still sales, but it takes on a different flavor.
Makes sense. And Blake, how do you see the role of customer success evolving in this context? Because a lot of what you just described in the traditional B2B SaaS play is what the customer success teams have been doing, which is driving adoption and then helping create expansion in that account. So now obviously the front end of it, which is a sales process, is happening self-service or in a much smaller, limited way, a user sort of signing up at an individual level. And then after a point in time where certain teams have adopted, now you're going enterprise-wide, or what are traditionally called ELAs, enterprise agreements. So how do you see the role of customer success changing in this context?
Yeah, well, it is an interesting call out because sales and success are starting to blend a lot more in the product-led world than they had ever before. Yeah. And so I will often describe the sales role as it's really a customer success like sales role that you're doing. And so there are a lot of similarities there. And in some PLG businesses, this tends to be a little bit more in the earlier PLG businesses versus the at-scale ones. But you will see that there actually aren't different terms or titles for these individuals. They're all customer champions, or they're all sort of support specialists or onboarding specialists, or things that are sort of more generic as opposed to account executives in terms that are clearly sales oriented. Right. So the roles are switching or merging, and kind of there's more overlap. But what I do see sometimes is that the customer success person can still act as that, almost like a concierge for the customer journey. How do I help you get to the next stage of the customer journey? How do I help you get to the next? Okay, you're now at a stage of the customer journey where it's about going from one team to multiple teams, or going from multiple teams to an ELA. Mm-hmm. Okay, it seems like maybe I need to pull in a different team member from my side, which happens to be a sales rep, and they're going to help you with that next phase of the conversation. I, as the CSM, identified that that's where you are in the customer journey. I'm trying to help you by bringing in my teammate who can help you with that phase of the journey. So it ends up being a lot more of a, kind of 2 sides of the same coin, sales and success, right, for this expansionary process. And one identifies and one closes. But yeah, there still is a lot of overlap, that's for sure.
Got it. Okay, so let's talk about data and metrics. So, what sort of data should founders be looking for at the various stages, and what kind of metrics that we should be thinking about as we're building out a PLG business? What does that look like? What's different from a traditional sort of SaaS metrics that we're all very comfortable and used to at this point?
Yeah. So all the SaaS metrics, ARR and CAC payback and gross net retention, all of those are the same. Those all matter, and those are all still important, and hopefully PLG makes them look better. But in terms of operational metrics, what matters? In the early days, honestly, it's going to look like a consumer app. The metrics that matter most are how many installs or signups am I getting? How many of those people are actually activating and not just ghosting me after they create a username and password? How many of them get to the sort of aha moment of being activated? What does our 30-day retention, or 60-day retention, or 90-day retention look like of individual users? And there's also an angle you can say, well, what does my product exist to do? How many times is that thing happening? Zoom exists to host meetings. How many meetings were hosted? How many meetings were hosted by sort of a particular account or cohort or domain? Are we seeing that the usage is increasing and scaling? So again, very product-oriented metrics, and very, in some ways, consumer-like metrics in the early days. Now, you'll always track those because, again, product is the sort of starting point of the journey. But then later on, you start to say, okay, how do these product metrics turn into perhaps metrics that, matter for those CSMs or those sales reps that I mentioned? And that's where you start getting into things like PQLs, product qualified leads, which is, perhaps a replacement for the old marketing qualified lead and things like that, because your product is doing the work. And so there are additional metrics, but really, I think that's probably the biggest thing, is that the SaaS metrics stay the same. There are some interim metrics kind of around PQLs and other things that sort of tell you this lead is ready for some human activity. And then really it does start with, and the foundation always ends up being, those product metrics.
Got it. And obviously product data and usage becomes a very critical criteria for how you measure success, and whether you're headed in the right direction as a company, as well as for your customers, whether they're adopting your product in the way that you'd expect them to. How do you, so, what are some of the challenges that you see with bringing those product usage metrics to sales teams or customer success teams so they can actually help drive the adoption that you'd expect to get out of your accounts?
Yeah, well, it's the classic needle in a haystack challenge, and signal versus noise. There is a lot of product metrics and individual data points and all these things, but which ones matter and what are they telling me? It's more important than just like high level stuff of MAU and DAO. Like those are important, but really you need to be keyed on what are the metrics that matter for our product specifically. Again, like Zoom hosting meetings and how many meetings over a certain time period, how many attendees were in the meetings, like those types of things that sort of communicate, utility and value as opposed to just high level product metrics. So signal versus noise is a challenge.
Yeah.
And then when you have so much noise or so much potential signal, then how are you surfacing that to an individual rep in a way that they can actually act on it? It's not like piping real-time streaming data into Salesforce is particularly easy. And so you have this challenge of identifying the signals that matter, surfacing them at the right time so that you can take the next best action. A lot easier said than done.
Yeah, and we live and breathe that every day on behalf of our customers because we're talking to a lot of PLG companies helping bring their product data into the sales and service organization. And separating that signal from the noise is obviously one of the biggest issues that we see. The other issue that we see is the way that product data is structured. It's not designed for account or user level information that CRM teams consume. So transforming those data models from event streams to accounts or contacts is a pretty tricky problem. And that's one that we feel like we can add a ton of value to. But really enjoyed this discussion. Thank you so much for your time. Where does PLG go from here? Any final thoughts?
Well, I think we talked about it earlier, which is I think PLG, everybody's talking about it now, and it's this awesome community and this awesome movement. But we're still relatively early in terms of seeing the trends of PLG, disrupting and taking over, that 80% of software applications. So what does the future look like? More penetration into that, more automation. And then also for all of us as end users, more awesome tools out there that you don't have to talk to sales to try and use. And there's something new every single day on Product Hunt that all of us can get value out of. And I think that's only going to increase in a dramatic fashion.
Yeah. Blake, what's the best way for our audience to reach you besides LinkedIn, of course?
Yeah, the best way, honestly, that probably is the best way. The only social media I have is LinkedIn. So find me on LinkedIn, add me, reach out. And that is also where I publish, a weekly video series about product-led growth. So great place to connect and follow for more content there.
Awesome. Blake, thank you again so much for your time, not just today, but the past week as well. It's always a pleasure to talk to you. I think what you've given us in these two-part series is essentially a masterclass on PLG that every founder should watch and listen to. I've learned a lot, and as always, it's a pleasure. And anybody that's watching today, if you'd like to talk about PLG, or if you have thoughts on that you'd like to share with us, please do reach out to us. We're at Immersa.ai, and we're always here to help you figure out how to take your data and turn that into revenue if you're a PLG business. Look forward to continued interactions with you, and thanks again, Blake.
Thank you so much, Asim. Really enjoyed it.